Hello, and thank you, and welcome to another episode of Contemporary Living Live, where we provide lifestyle solutions for everyday people. And I say this from the bottom of my heart, you guys. We can't thank you enough for choosing, because there's so many options out there, so many things you could be doing right now. So we can't thank you enough for choosing to share your time and energy with us as we navigate through this thing called life for the next 60 minutes. So, how's your week been? How's your week been? And I'm asking you that because, yes, we are in the wonderful state of South Carolina, but guess who had to go to urgent care, y'all? Yep, me. Sinus infection, ear infection. I mean, it was all happening. I don't know what was going on, but we got to urgent care. They gave me my meds, and now I am recovering. The funny thing about it, or the last time I went to urgent care was I had to go in 2020. Something similar. I was experiencing something similar, but they do now the COVID test. Now, as soon as you go to urgent care, they give you a COVID test, and then they give you an influenza, a flu test, and they can get that thing done in 15 minutes. You guys remember last year when it took a little while to find out your COVID results. So I'm happy to say COVID free, but that sinus infection and ear infection, it did a job, but I am better and I am back. So we are excited about today, but before I get into it, of course, we got to get into the housekeeping notes. And these housekeeping notes, Andre, he is not here with us today. You can't see him physically, but he is here. But we want to tell you where you can find us. And you can find us you can find Contemporary Living on Facebook. You can find us on YouTube, but now we're posting to IG. And if you want to get in contact with us, you can go to Contemporary Living at 360tv.com. That's Contemporary Living at 360tv.com. We are not hard to find, you guys, and we want to hear from you. We welcome any messages, any comments or suggestions to our site. We are excited when we hear from you. Now, what else are we excited about? We are excited about today's guest. So if you've seen the commercial, we're talking about taxes. Now, what we try to do at Contemporary Living is keep you ahead of the game. You guys know, as we celebrate this Christmas season, or for some, it's a morning for Christmas season. As we do that, we know tax season is upon us. It's right around the corner, like clockwork. So if you worked a little bit and you file taxes, you know that it is right around the corner. And we want to keep you ahead of the game. It's always good to be ahead of the game. So tonight's guest is here to talk about it. So I told you, if you've got tax questions, or if you have, you want to hear from our guest tonight, you need to be tuned. You need to be putting in your questions. So without further ado, I'm going to go ahead and introduce our guest. Kirby Ashley is a licensed tax professional with 30 years of experience helping individuals and small business with all matters IRS. He has expertise in tax preparation and IRS representation. He's also an expert in all facets of tax preparation, including individuals, partnerships, S-corps, LLCs, trusts, and estates. When he's not on his tax grind, helping others with their tax problems, he is reading or playing chess, or, check this out, filmmaking. Yes. Kirby enjoys making short films. He was recently accepted into the Sundance Institute's collab program for aspiring filmmakers, and is currently working on his 4th short film, which he hopes to develop into a full-length feature film. Ladies and gentlemen, I bring you Mr. Kirby Ashley. you doing?
Good, good. You?
Good. I'm doing well. I'm doing well. But we gotta take it back for 1 second, right?
Mm.
Because before we even talk about taxes, and that's the main theme of the day.
Right.
But it's something that's really exciting as part of your bio, okay? And that's like we need to highlight on that Sundance. So for our audience, for those of you who aren't familiar with Sundance, Sundance is a nonprofit organization, and it was founded by the actor, director, and philanthropist Robert Redford. All right, and what it's committed to is the growth of independent artists and filmmaking. And they hold annual Sundance film festivals in Park City, Utah, annually, and that's where all the stars and the paparazzi come out to get the story and things like that. So it's a big deal. And so our guest, Mr. Kirby Ashley, is now part of that little Hollywood social circle. Huh. That's a big deal. Can we start there, Mr. Ashley? Tell us a little bit about how did you even get into the thought of filmmaking? Because I know there are probably a lot of aspiring filmmakers out there, and how did you even get into that?
This was 21 years ago. I called my sister up and was whining to her about how I wanted to make movies. And I had a son, I had a business, and she says to me, "Well, why don't you go back to school and learn how to do it? You ain't doing nothing else."
Right.
My sisters don't suffer fools, okay? So you go to them with a problem, you do something about it, don't do anything about it, but don't whine to them about it, So I did. I went back to school. I did 2 years at Columbia College down in downtown Chicago, and completed the film program.
Wow.
And I've been making short films ever since. I made 3. We're working on our 4th. But with regard to Sundance, I've been trying to get in Sundance for that whole 20-year period. As soon as you got
so this is a big deal.
Your undergraduate thesis film. You submit every film you make after that, and they always turn me down. So, but they got this. Because they had this thing, it's called the Sundance Lab. Now, Sundance is the largest, most prestigious film festival in America.
Right.
So, I mean, you submit to them, you don't really expect to get in. You just, it's a formality.
Just do it.
Just do it. Right. But this time, I submitted my script for the short film that I'm working on right now.
Yeah.
And, there's an application process. You have to explain to them why they should pick you out of the 15,000 people that submit, right?
Yeah.
Because it's right there on the application. They're going to pick 50, right? So I filled out the application. I submitted my script, and I was one of those 50. So
wow, out of all of those applications, we salute you and we congratulate you
on the last day that there were 15,000 applications. And you think about that, and you think, they couldn't possibly have read all of those scripts, right? I mean, there had to be some kind of process of elimination or something. So, there's a certain amount of luck involved, no matter what, when you talk about that many applicants.
And consistency, because you have been doing this for some time.
Well, yeah, I mean, obviously, I must be getting better at my craft. Practice makes perfect, the whole thing. Yeah, I would agree with that. But still, it was huge, and it still is, because I mean, you have your own advisor, and they tell you step by step what you need to do to make this one more successful than all your previous ones.
Oh wow! So that's good. So now, do you think how is it jumping from? Because you said you did a series of short films.
Yeah.
Now you're trying to turn this into a full-length feature film, a full feature film. What's the difference? Do you know like what's the difference for you?
I mean, there were 3 programs that I was accepted into. I was accepted into the Producers Corps. That's the prize. That's the one they only take 50 applicants.
Right.
But then they got 2 other programs, a directing program, which was really just a review for me, because my concentration in film school was directing. So that was mostly review, but they take 150 of those.
Yeah.
And then there's the screenwriting course. That's the one I'm in right now.
Right.
So they walk you through, the whole process of extending out your idea into a feature film. So I actually did my my finals. Yes, I submitted my finals this morning. I did it yesterday, slept on it, and submitted it this morning. But that program isn't over yet. I'm still in the screenwriting. I completed the producers program, I completed the directors program, and the screenwriting program will end on January 9th.
Okay,
so they already walked me through what's called a treatment. You write the treatment, and then you write the script.
The treatment and then the script.
Right. And this is what I just submitted yesterday. I submitted my, basically it's called an outline for the treatment. You just sort of map out the story. And then your advisor looks at it and he advises you on taking it from there.
Oh, wow. Well, we just want to say definitely congratulations. And hey, we hope whatever you want to do, what do you want to do? You want to be at the Oscars? What you want to do? You Golden Globe Award? What are you trying to do with this?
Get the movie made. That's it. You know, get it made, get it, out there in the market. That's it.
Okay.
Okay.
All right. But I mean, so I really wanted to just kind of address that because not many of us know people who are filmmakers and things like that. So that's always interesting. I find it when we have guests here and they send us their information and their bio, there's always some little nugget that, you find out just how vast and, people are. Like they got a lot going on. So it's more than just taxes, right, Kirby? It's more than just
people have lives. People have hobbies. People have, things they do outside their work life.
Absolutely.
And we all have our dreams, right? When I called my sister 21 years ago and told her I wanted to make movies, that was a dream.
Wow. And look at it. Yeah. Look how it's manifested now. Yeah,
it would appear. So it would seem.
Yeah.
But we're going to be doing a fundraiser for the short film. And,
okay.
With any luck, it'll make it all the way. Make it all the way to the finish line.
All right. Well, we're rooting for you. We're rooting for you and definitely support you. So just let us know. Let us know how we can be of assistance. But what we come to talk about today is something you can do with your eyes closed.
Yeah, I've been doing this longer than my son is alive, and my son is 29 years old.
Taxes.
He's actually the reason I started this business. My girlfriend at the time told me I was pregnant, and before that I was just a wild-eyed kid,
right?
29 years old, but still just wild-eyed, crazy, But after that, life got serious. Suddenly I had responsibilities.
And you took that's learning to do taxes. Oh man, you talk about serious. I mean, you think serious is just okay, let's just go get a job or do something. You took it real serious. You took like seriously.
That was actually a friend of my father's. He noticed that I had a knack for numbers. He talked me into getting into the insurance game. Through his contacts in insurance, I met a guy in the tax game. He noticed the same thing, that I had a head for numbers. And so he talked me into helping him out one tax season. That was in 1991. The following year, I bought a copy of the Internal Revenue Code and just started. Actually, at the end of that tax season, I bought a copy of the Internal Revenue Code and I just started reading and have been ever since.
Wow. So
I got my license, and here I am.
So that's what we want to get into tonight. So we're gonna start off with some little, like me and Andre been doing these little boxing online classes. So we're gonna start with these little jabs. We're gonna start with these little jabs. So let's start off with a very simple question. And don't forget, if you're in our audience tonight, you can type in your questions. There's probably nothing that Kirby has not seen or experienced, but there's always something new. But he's been in the game for a little bit, so he probably can answer your question right off the bat. But let's start off with a little jab. So who needs to file taxes?
Well, anybody with income over a certain threshold, and that threshold, a good benchmark is $10,000. But if you get income from self-employment of over $600, you're required to file. So I mean, it's just sort of, there are these thresholds, and they range from $10,000 to $20,000. But a good rule of thumb is if you made more than $10,000, you probably need to file.
Okay.
You might want to file, especially if there's withholding from your income.
Okay.
Even if your income is less, but if your income exceeds $10,000, you probably need to file.
Okay, so
More likely than not, you should file.
And I never want to assume that what the audience knows. So when you say withholding, what are you talking about?
Withholding from your income. There's income tax withheld, there's Social Security tax, and there's Medicare tax that are withheld from your income. If you only had Social Security and Medicare withheld, you might not necessarily need to file. Again, you want to think about that threshold, $10,000. But if you have income tax, that's generally right next to your wages. Will be your federal income tax withheld or state income tax withheld. If those two things exist, you might want to file even if your income is below that, because most likely it'll be fully refunded to you.
Wow.
Because you'll have certain deductions that will require that money to be given back to you. But if your income is more than a good rule of thumb is if your income is more than $10,000, better safe than sorry. Probably better or at least ask somebody if you're required to file.
Okay. All right. So I know it's
somebody that knows what they're doing.
Yeah. So we got a little statement here. So this is interesting. So every state, like I think Christy just said that in Texas, they don't have state taxes.
They don't have a state.
Okay.
I got clients in Texas. I got clients in Florida is another state that doesn't have an income tax. I think.
Oh, wow.
If you don't have an income tax, a state income tax, then you're not really worried about that. And the control is always the federal, because most states follow the feds. So again, if your income exceeds $10,000, more likely than not, you should file.
Okay. All right. So what about our great state of Illinois? Do they take taxes out? Do I have to ask, right?
I would not be the least bit surprised if I mean, they're gonna have to do something, because they always crying broke. But I would not be the least bit surprised. They don't right now. They don't tax retirement income, but I'm expecting that to happen anyway. I'm expecting that to happen. I mean, they resisted it, but they're gonna have. They're gonna have to do something. They're gonna have to raise the state income tax, or they're gonna do. I mean, the easy one is retirement income, but that's tough because older people vote.
Absolutely.
Those are the people receiving retirement. So
absolutely. I mean, and that is that's as a retired person.
Yeah, boy.
I don't want that to happen.
Right.
So how did Illinois? Why do we have some states that don't, and then you got some states that need to? Like you say, Illinois needs to. Well, how we broke?
Well, I mean, larger cities usually have higher expenses. I mean, that's one factor. So if you have a higher population, it's going to cost you more. It's just like having another child. If your population is higher, there are more costs. Right. 2 children cost more than 1.
Absolutely.
Same thing with citizens. 2 citizens cost more than 1. So you generally see higher taxes on higher population states.
Okay.
But the other thing you want to keep in mind is these places that don't have an income tax. They either have a higher sales tax or they've got some other way of getting money. A place like Texas, it would be they've got that oil down there that they can tax.
Oh, okay.
But sales tax, if they're not doing an income tax, they generally have a higher sales tax. That's generally speaking. Okay. But they're making up the difference somewhere, unless it's a lower population place where you just don't need it because you don't have as many expenses.
Yeah. And so another thing that we want to talk about is, for instance, a lot of people, have you ever heard of this, a lady that I like to listen to and follow? Her name's Lynn Richardson. She's actually out of Chicago. She used to be out of Chicago. She's Lynn Richardson. And this is for businesses. And she's always stating, now I'm paraphrasing here, but if you get a business, you save more on taxes. So her motto is everyone should have a business because of the tax benefits that come along with running a business. So, I see your face. You put your head down. You
Well,
put
it's
your head
dangerous.
down. I know my girl Leah can't be wrong. Come on.
No, it's just dangerous to say that. Now there are certain tax benefits, especially in the early years, but tax benefits are individualized. It just depends on the individual situation. I mean, I get clients all the time. Okay, say for example, you maximize your deductions on you start a small business and you're maximizing your deductions. So on paper, your business is not making any money, right? You're getting all these deductions. Maybe you got a job, you got some withholding from, and you're getting larger refunds from your day job while you're working your business, building up enough so you can quit your day job. Yeah, that's all great until you want to go to a bank and get a loan, because a bank is not going to loan money to a business that isn't turning a profit. And turning a profit in bank language means paying taxes. So the very thing she's talking about avoiding by starting a business is what's going to keep you from getting a business loan, right? Because you're not going to loan money to a business that isn't paying taxes, right? So yeah, tax benefits in one situation. I mean, there are certain tax benefits in the other situation where you're paying taxes, but you're minimizing those taxes through various tax planning strategies. But if you're going to a bank and you're looking for a loan, then you want a business that's paying taxes.
Right.
If the business isn't paying taxes, they're not going to loan you a dime.
Right.
Zero taxes means zero loan. That's what that means.
Oh, that's a good one.
And I consult and people come to me and they get this bemused look on their face because they want to get the maximum tax benefit, what she's describing, cut their taxes all the way to the bone, which generally means you're not making a profit, right? You're reporting a loss to the Internal Revenue Service, which allows you to get all these other benefits of that. But if you're going to try to get a bank loan, I mean, you have a person in the same breath, they try to get a bank loan, but they want a big refund, and it's like you can't do both.
Right.
Literally can't.
Right.
Unless you're General Electric or somebody who's got so many assets that it don't make a difference. You trade publicly. And you got other forms of collateral. The bottom line is, a tax benefit means different things for different individuals, and it always makes me nervous when people make it sound like this one way to look at this, because those are the people who come to me with this bemused look on their face, like, yeah, but I want this $25,000 refund, but then I want to get this $100,000 loan from the bank, and it's like those two things don't go together.
Right.
So yeah.
So you can't have it both ways.
No, a tax benefit is an individual situation.
Right.
All right. It's never general.
And I'm sure as she explores into her program, she probably addresses that. But you're right.
If you're trying to buy a house or trying to expand your business, then tax benefits means one thing. If you're trying to maximize your refund or minimize or eliminate your tax liability, that's another individual situation.
Oh,
but
wow.
You're not going to be able to do both.
Right.
The thing. And I just wish people who say things like that, I don't know, included a little more nuance.
Yeah.
Because it really is. I mean, I run into it all the time. I'm like, well, so and so did such and such, and they got so and so, and it's like, yeah, well, they doubt.
They come to you with other people's stories.
Individual situation.
Right. So the first thing we need to get in our mind is taxes, whether it's business or whether it's for your personal taxes, it's an individual thing.
Yeah, it's always
every situation is different.
Yeah, and I got 300 clients, and they're all unique.
Yeah.
Right? Good advice for one of those clients is bad advice for the other one.
Got you.
All right. In both cases, I'm giving them good advice. Right. But if I reverse them, then I'm giving them both bad advice.
Right. Okay. So it's an individual thing. Yeah. So I want to know about.
I would impress upon people. Taxes are individualized.
Okay. I'm gonna write that down. individualized. Okay, so one thing I want to talk about is now, what have you seen like last year with taxes during COVID? Are there any changes the way we're going to do business this year as we approach as we approach the next tax season? What are we going to see anything different? Can you speak on that?
The industry, you know, and I just left. I think I mentioned to you that I just left
in Vegas.
In Vegas, and no,
yes.
this one was in Arizona. We were in Arizona. The Vegas.
Oh, Arizona. Okay.
This one was in Arizona, and the one in December was in Arizona.
Okay.
But the Nightmare on Elm Street for this year, and it doesn't look like it's going to be quite as bad as we thought it was going to be, because we thought they were going to put this new advanced child tax credit back into the law and dump it on us right in the middle of tax season like they did last year. But the advanced child tax credit is going to be the nightmare this year.
You said the advanced child tax care?
Yeah, that's that $300 a month per child that they're giving people. It's actually a little more than that if you have a child under 6 years old. But
so
people have been getting these checks since July 15th.
Oh.
The people that were getting those checks for their children under the age of 18, people who have been getting those checks, they're going to have to reconcile their income tax return. Some of those people are going to end up owing money. It's going to be a mess. Oh my God. And explaining to these people this stuff. But the bottom line is this: the IRS is supposed to send you a letter on January 1st, January 2nd, telling you how much money you got for the children. Because I mean, the money actually is for the children. It's, you know, in care of, to you, in care of, you know, for
right.
the child. So each child is $300. It's $250 a month per child, basically.
So they've been paying this since July.
Yeah, they've been paying it unless the child is, and they were supposed to extend it out another year, but this apparently Joe Manchin just said no, we ain't doing it.
Okay.
Which, part of me is like, what a relief. But you know, the other part is, man, you know, those people, you know, they probably get used to that money, and now they don't. Now they gonna get it. It stops. They got the last check December 15th. So no more checks, according to Joe Manchin today. But the bottom line is this: you're supposed to get a letter in the mail. I think it's a 3608 is the number, is the name of the letter.
Mm-hmm.
But they're supposed to send that letter out telling you how much money you received.
Okay.
For this advanced child tax credit. And that amount is going to be deducted from any other refundable credits that you might have received. You know, your earned income credit is the most noteworthy. But if they gave you more money than what your refund shows, then you gotta pay.
Oh wow!
And those are going to be some uncomfortable conversations. But you know, I've been having that conversation with people that have to pay, you know, in all kinds of different situations.
Yeah.
The bottom line is, the overwhelming likelihood is that quite a number of people are not going to get the letter, and even if they get it, they're not going to know what it means. And
so that's something we can definitely tell our viewers to look out for. You say so it's a 3608, and it has
I think the number on it. I think it's a 3608. But the bottom line is a letter telling you how much money you received in the mail each month for your children.
Okay.
So the bottom line is you're a person who qualified for the earned income credit. And
right.
They created this new advanced child tax credit to get you some money in your check each month, so your kids can eat.
Okay. All right. And on that note, guess what? We're done. We're at the bottom of the top of the hour.
Oh, yeah.
We're at the bottom, and we're gonna go to a commercial. So we will be right back to talk more taxes. So get your questions ready with Mr. Kirby Ashley. We will be right back. love partnering with small businesses just like us. You saw our coffee commercial and you saw Andre's real estate commercial. And we love doing that because we believe that teamwork makes the dream work. So if you are looking to promote your business or your service, then do it right here with us on Contemporary Living. For a small fee, we will create and promote a 30-second spot and air it on our social media and on our live broadcast for an entire month. All you have to do is send us an email to contemporaryliving@360tv.com. That's contemporary living at e360.com. I have the ticker here somewhere, you guys. I cannot find it right now, but that's where you can find us. And so we are just going to keep on. We've been talking with Kirby Ashley of Kirby Ashley and Associates about taxes. It's important. There are some changes going on. So he's trying to break it down to you, what you need to look out for and what we need to do to be, we want to be ready. You know, we want to stay ready because if you stay ready, you ain't got to get ready. So Kirby is going to do just that. So we are going to bring him back into our stream for the bottom of the half of our show. All right, welcome back. You see that commercial? You see that commercial?
Yeah, they were both nice. Yeah.
Thank you.
Give me one of them. I can make one and send it to you, right?
Yeah, you can make one and send it to us.
I got crew. You know, we can put some.
Look, he said he got a whole crew. Look,
I know this.
Let's work for us.
No, I had to do one for that directing.
Yeah,
I just took. I had to do a short film. I mean,
just
a 2-minute movie.
Uh-huh.
You know? But you talking about 30 seconds? You know, I've done
30-second spot too easy, right?
Well, I don't know about too easy, but I can put one together. You know.
All right. So let's get back to talking about taxes. So we've covered the advanced child care tax.
And I hope I wasn't confusing people, but the bottom line is that money that people received on the 15th of each month, beginning in July, is going to have to be reconciled on their tax return this year.
Yeah.
If they don't get the letter, that's going to be a problem.
Mm-hmm.
We expect nightmares because we expect a lot of people to either not get the letter or not know that they need the letter to do their taxes.
All right. And speaking of nightmares, okay, I want to talk about this. I don't know if you ever seen this movie with Queen Latifah, Set It Off.
Yeah, hell yeah.
One of the lines in that movie, you know how you always memorize these lines. Yeah. One of the lines in that movie was the 3 people that dude didn't mess with was the I, the Aura, and the S. You do not mess with those 3. And now that we've said that and talking about nightmares, let's talk about what happens if you get audited. What should we do? Do we just call you? Because the audit is a scary thing for a lot of people, whether your taxes are dressed, whether you got your taxes in order or not, it's just a scary thing. So tell us a little bit about the audit process or what you've experienced or what you have helped people with.
Well, at least in theory, if you owe less than $10,000, you can probably handle it yourself as long as you got all your receipts. I personally believe that anybody who owes the IRS more than $10,000 would have to be out of their minds to try to handle it themselves. But I mean, if you know what's on your tax return, you understand all of the line items, and you have all your receipts. I mean, they always tell you that the system is designed for you to be able to do these things to represent yourself before the IRS.
Yeah.
I don't see how
so they say.
Yeah, I mean, okay, because I represent people before the IRS, and I'm talking about people who owe the IRS hundreds of thousands, in some cases millions of dollars. And my best recommendation to you is to treat an IRS agent like you would a prosecutor. Whether it's a local, state, or federal. Well, technically, this is a federal prosecutor.
Yeah.
Because they have that kind of authority. It's civil authority. It's not criminal authority.
Right.
If they want to refer the case to criminal because they think you just a crook, you know, and you get a lawyer. But the bottom line is, if you're more than $10,000, I personally believe you'd have to be out of your mind and try to represent yourself, because I mean, they're like cops. I mean, just think about it like a beat cop and a cop or a revenue officer, or with these TCOs. That's just a revenue agent in training. They're trained to get information out of you and give you as little information as possible. Right? They send you stuff that they know you're not gonna read, and they spend their whole time trying to get you to jam yourself up. I mean, that's just what they're doing. Right? The good cop, bad cop routine, whatever you want to call it.
Yeah.
Bottom line is, they're trying to extract information from you.
Wow.
And
so you need a lawyer
and use that information against you. I mean, that's what they're trained to do. They're trained to get the information from you, and wherever possible, use it against you. I mean, that's their job.
Wow.
Right? Which is why I always tell my clients, look, do not talk to them. If you hire me, don't talk to them. The issue being, you know, hiring somebody like me is an expensive proposition. You know, my billing rate is $250 an hour, and I charge a minimum of 10 hours to represent somebody in an audit. That's my minimum, right?
Okay.
And, you know, it starts there. So you know, that's a factor that you want to consider. I mean, you know, just paying me or somebody like me. I mean, somebody that knows what they're doing, it's not cheap. If you only owe $10,000, why pay me $2,500? You know,
right.
But if you owe $100,000, then even $50,000, it just you're gonna talk to these guys, and they're just gonna anything you tell them. You know, it's like in your Miranda rights, where they say anything you say can and will be used against you.
Yeah,
that's how it is in an audit, and that's what you want to go into the audit believing. Anything you say can and will be used against you.
You got to be real careful. Yeah. Now you mentioned Kirby. You mentioned the word crooks.
Yeah.
Now, I'm seeing they jamming people up for these PPP loans. What's going on with that? This PPP ain't no joke.
Yeah, most of the people that get jammed up, they owe more than $150,000. They borrowed more than $150,000.
Yeah.
But even if you, I've seen people get jammed up borrowing less. You know, like 50.
Wow.
Usually, I mean, the way it usually works is somebody rats you out. You piss your boyfriend off, you piss your girlfriend off. They call the man on you. You know, that's the usual scenario.
Can't trust nobody.
Family member. You know, it's always somebody you know, because it ain't too many people gonna be in your business, right? So it's gonna be somebody you know.
Wow, that's good. That's good. That's good to know. It's gonna be somebody you know.
They know your business, right? And they made that phone call. And you know, now you all jammed up, right? Or they're just hating because they didn't get one, you know. Because let's face it,
it's a lot of that out there.
Especially that first round. A lot of people got those loans that didn't own a business.
Right.
Because they would call me and try to get me, and I know they ain't got no business. I put my name on that.
Right, absolutely.
No. You want to go because they go online and do it on do one of them people, because I'm not. Yeah. I'm too old to go to jail.
Right.
I mean, the bottom line on those is that in most cases, somebody ratted you out. That's been, you know, again, I just left a conference. You know, but the bottom line is this: if you borrow less than $150,000 and you actually owned a business, you have nothing to fear.
Yeah.
You know, because especially on the second round, where they were much more scrupulous about verifying your income, verifying your tax return.
Yeah.
But if you didn't actually have a business, just don't piss nobody off, and you. And you probably get no worries because they ain't got time. You know, got too many loans out there. They ain't got time. But if they have a good lead, they're gonna follow that up. They're gonna follow that up because of the first round, because so many people got those loans they didn't have any business getting.
Okay. Now somebody, I just want to interrupt. Somebody asked me what was it that I was drinking. I always have my Perrier. This is Perrier.
This is Pepsi.
Whoa, you got to turn it off.
I'm more than happy to admit that. Ordinarily on a Sunday, I'd be half in the bag by now. You know, I apologize. I didn't shave, but you know, I wasn't even thinking about,
That is fine. We're just glad you can take time out of your day to come and just educate us on taxes. Now, another thing we want to talk about when it comes to taxes, does bankruptcy, like if I file bankruptcy, how does that does that or in any way impact my taxes for someone that's filed like a chapter, what are they? Chapter 7 and
11 and 13. Well, if for individuals it's 7 and 11.
Okay.
It's 13 and 7. For businesses, it's chapter 11.
Okay.
Yeah. But not particularly. I mean, unless you're trying to include your IRS debt in your bankruptcy, and then the debt has to be at least 3 years old. But beyond that, anything that you get, well, you have the issue of what's called cancellation of debt. So if you do a chapter 7 and your debt is erased, cancellation, the canceled debt is treated as income. So you
have to pay,
you have to report it as income on your tax return, and you may or may not have to pay. I mean, let's face it, you did file bankruptcy, so you were what's called insolvent at the time. So if you were insolvent at the time that you received this cancellation of debt, this quote unquote income, then you probably don't have to pay taxes on it. But that's something you want to have a professional do. Cancellation of debt is one of the more difficult concepts in tax law. I mean, just think about it. You borrow some money from somebody.
Yeah.
They cancel your debt. You didn't. I mean, and the IRS says, okay, so now you got to pay taxes on it.
Yeah.
I mean, it's just kind of. It's not the usual thing you pay taxes on. Usually, you pay taxes on your income from your work or something.
Right. Right.
This is all they did was cancel a payment that you were making.
Okay.
But that's the only way it would. I mean, any debt that you had that you was paying interest on, you no longer had those interest deductions. That kind of thing. So those are just sort of ancillary impacts. But the primary one would be, in trying to include, say, IRS debt in your bankruptcy, and for that, the debt needs to be at least 3 years old.
So one of the things we always ask when we have people who have businesses on, give us one of your business horror stories. Don't give us any names or anything, but just tell us one of your business horror stories, because it's out here and it's real.
Business horror stories.
Yeah.
Maybe
a client came in and they had this situation and it was like, wow, you had never heard of anything like that before.
Probably the strangest thing that happened for me this year, and I don't know that it's a horror story because it got a happy ending, but
well, that's always good.
This guy, his lawyer this guy, he was the executor of an estate. So the estate, he has certain payouts that, if you're the executor of an estate, your job is to pay everybody that they owe and then distribute the difference, distribute the rest to whoever the person who made you the executor asked you to. And in this case, it was him. She said, pay my bills and then the rest is yours. And he was just a friend of hers. They weren't even, they weren't lovers. They were just friends. But he looked out for her when everybody else abandoned her. But anyway, his lawyer wanted him to consult a professional before he paid the IRS, because she had a little IRS debt, right? And it's like $25,000. And the lawyer was trying to find somebody to work with, and he didn't find anybody that he thought was up to the job. He hadn't found anybody. It took him a couple of months. He hadn't found anybody that was up to the job. So the guy just paid it. He paid it $25,000 because he felt like he owed that to her.
Yeah.
Right? So after he paid it, the lawyer kept looking. He finally found me, and he's way out on the north side someplace. So I don't know how. He got a referral, but he asked me to take a look, and I took a look, and for the first time in my career, and I've been doing this 30 years, they had this guy paying interest and penalties on money they owed him. And I had never seen that before. I'm like, I see people pay interest and penalties all the time. I get away if I can, but paying interest and penalties on money, they had messed up. His lawyer had been right. Somebody needed to look at that thing before he paid it. Because what they said he owed, he didn't owe. And they charged him penalties and interest on what he owed. And since he didn't owe it, the interest and penalties were
Absolutely.
Yeah. But anyway, I ended up getting them like a $16,000 refund, something like that. $16,000.
That was a good, yeah, like you said, it
Only
turned out
owed
good.
$8,000.
But it does happen because when anytime you thinking of taxes, you thinking of this, it's just so much. People don't like to read to begin with. Some people just don't like to read. They won't look at the information, and then you might not know what you need to know.
Right, and it's not just that. Even if you read it, you don't necessarily know what you're reading. I mean,
Yeah.
he looked at it and didn't even realize that he paid penalties. He said, "No, I didn't pay any penalties." Like, well, no, man, I'm looking at it. You paid a $3,800 penalty. And he didn't know that. He didn't owe the money, so he didn't know the penalty. So I made him give it all back.
Okay.
So
All
that's
right.
not necessarily a horror story, but it was weird.
I mean, but it's a good story, just a tale, a cautionary tale.
Yeah, right.
How
Just
about
because
that?
you read it don't mean you know what you're looking at.
Exactly. So now that we're in that frame of mind, that's good to lead with this. So how can people best prepare for the tax season? What would you recommend that they, do?
Well, you want to make sure you got all your income documents, anything you receive income from. Now, fortunately for us, most of the things that we need to file on, for most of the things for most people that need to be filed on an income tax return, it's right there on the envelope. Important tax document, right?
Mm-hmm.
Now, you might have been paid 1 cent interest on a bank account, but it's going to have that emblazoned on the envelope. Important tax document. All those things you want to take to I mean, obviously your W-2s, your 1099s, this new 1099 NEC. You want to have all those documents. If you're a business, you're going to want to know your income and expenses. You want to, if you're on QuickBooks, you want to print out that profit and loss, end of year profit and loss for your tax preparer. But the bottom line is all income documents, anything where there was income and any expenses related to that income, whether or not it's deductible is up for your accountant to determine. But he can't make that determination if you didn't provide him with the information.
Okay. Now I know
and this is the most important thing.
Okay.
I would say about that is it makes no difference to the IRS whether you include everything you were supposed to include or not, because they're gonna blame anything that's missing on you. Because when you sign that tax return, and this is the thing, so many people don't understand about it. When you sign that tax return, you are signing under penalty of perjury that the information on that return is true and correct. That means you don't get to blame it on your accountant.
Right.
Right.
That's why people go to jail. Individuals go to jail. Their accountants don't go to jail.
Right. Except
that's a good job.
The accountant's the one telling them to put the false information on the tax return. If I tell you to put some false information on your tax return, I'm responsible. But if you bring the information to me or fail to bring that information to me, that's on you.
Right.
And that's people don't. I get so many clients. I mean, lawyers, doctors. They bring me in this tax return and they've been audited and there's this information on there and I asked the client what is this, and they have no idea. In other words, the accountant that they did their tax return just made it up, and they didn't know. They didn't know it was made up, but they signed under penalty of perjury. And it doesn't matter if you're a doctor, a lawyer, or an Indian chief. Now they probably glanced at the information, but they trust us, to do our jobs. And sometimes that trust is misplaced.
Wow.
It's
sad. Now you mentioned a form. You said a new form 1099 NEC.
Non-employee compensation. They
What's
just
that?
Non-employee compensation is self-employment income. It used to just go on 1099 miscellaneous.
Okay, got it.
I decided to differentiate a category just for contract workers. Basically, if you want work under contract for anybody and you're paid more than $600, I mentioned that earlier. If you're paid more than $600, the person who paid you is required to issue you a 1099. Okay. Now we all know the reality. Reality is I got clients right now. They got an account with $30,000 in there, and you ask what that is, and that's for cash employees. And I said, man, you're supposed to get them a 1099, and they'll say, well, if I give them a 1099, they'll quit. So that's reality.
So now they're catching the contractors. So I mean, so they're
NEC, right? NEC
it's a check and balance.
The contractor from other kinds of miscellaneous income.
Okay.
Because what used to go on 1099 miscellaneous, you would just put it. There was a box on the 1099 miscellaneous for non-employee compensation.
Yeah.
Now non-employee compensation has its own form. It's not supposed to go in that box anymore. I don't even think they've taken the box off yet, but clearly they intend to eventually. The idea is if you're a self-employed contractor, then you're supposed to receive a 1099 NEC.
All right. So guess what? It's time to wrap it up. The time goes super. I'm telling you, the time goes super fast.
Now I can have a drink, huh?
So we always ask the question when we look at Kirby Ashley, the man, Kirby Ashley, the CEO, Kirby Ashley, the filmmaker. Where do you see yourself in about 5 years? We won't even go 10. We're gonna leave it at 5. Where do you see yourself?
Retired.
Okay.
Retired.
Not doing taxes. Okay.
Yeah. Well, making movies probably.
Making movies. That's the thing. Yeah. And so for this tax season, what's your website? I think I got it along the ticker.
Yes,
but go ahead and tell me.
KirbyAshleyAssociates.com.
KirbyAshleyAndAssociates.com. So that's where we can find you. Thank you for that tax information. It was very, very beneficial. We really
more fun than I realized it would be.
You said what?
I said it was a lot more fun than I thought it would be.
Yeah, hey, you and Melissa, it's supposed to be fun. You thought it was gonna be difficult.
Yeah.
No, it's always fun here on Contemporary Living. Like we're about everyday people, and everyday people is not. We like to just like having a conversation in your living room, or how you would talk to somebody, and we just want to spread information. That's really what we are all. That's what we are all about. So definitely have a great holiday, and we have enjoyed you.
Everybody out there.
Yep. And we will be bringing our taxes soon. Yes, you guys, he does take care of our taxes. And we will be bringing you our taxes. And we wish you well on the Sundance project. So thank you very much. And if it's any last words, I'll go ahead and let you say something. We have a little bit more time if you want to talk to the people out there about anything. What's on your mind, Kirby?
Well, I look forward to see. I hope I see some of you guys in my office. Maybe not in the office. Maybe we'll do something virtually these days with all this COVID stuff going on.
Yeah,
I hope some of you guys come see me. If you got a problem, you need some consultation. We offer free consultations, by the way. If you just want to ask me a question about whatever. My phone number is 708-756-1500. If that helps. You can call or email me. Doesn't make a difference. But we have a portal that we use for. We're going to be encouraging more and more of our clients to use our portal because that portal is permanent, right? In cyberspace, we use the same security that J.P. Morgan Chase uses. That's actually my bank too, so I know that to be the truth. Okay,
what's the number again? Give us the number one more time.
708-756-1500.
Okay. All right.
9 to 6, Monday through Friday.
And let them know where are you located.
420 North Orchard Drive, Park Forest, Illinois.
Awesome.
60466.
All right. Well, again, thank you, Kirby, and we will see you again.
Okay. Look forward to seeing you too, Melissa.
All right. Bye-bye.
Bye-bye.
Well, I hope that helped with your taxes and you are able to get ready. I hope you've learned some things. Don't forget, for those with the advanced child care tax credit, January 1st and 2nd, be on the lookout for that form or that letter. You've got the 1099 NEC for those independent contractors. So you want to look out for that. If you get audited, go see somebody. Go see somebody. And then it's kind of like Kirby said, if you make 10 to 20,000, that's kind of like that threshold. You need to be filing taxes. Or if the government collects any type of money from you, you need to be filing taxes. Or self-employed. If you've made $600 or more, you need to be filing taxes. So this has been a great show. We want to thank you again for staying tuned and watching. And as I close out, I want to leave you with this quote by Albert Einstein. And Albert Einstein says, "The world as we have created it is a process of our thinking. It cannot be changed without changing our thinking." Now think about that. So every decision you make and I make begins with a thought. So, having said that, it would behoove, I like that word, you to think about what you're thinking about, because it opens the door to the actions you take and the decisions you make. So think about what you're thinking about. And as always, we thank God for his unmerited, undeserving favor called grace. Grace is a total absence from doing anything. You can't work for it. You can't buy it. You can't sell it. It just is. And God gives it to each and every one of us freely. And as believers, we know that Christ died for our sins. He was buried and rose again on the third day for our justification. It's in the word. Now let that sink in. And on behalf of myself and my hardworking husband and co-host, Mr. Andre Hill in Contemporary Living, Merry Christmas, Happy New Year. And remember, Jesus is the reason for the season. And we cannot wait to see you in 2022. Be blessed. Bye-bye.